Hi, this is Mike Andrag for BreakingCall.com. It's Thursday morning, January 14, dark and early in California before the market opened. And this morning we are going to lead off with a technical review of Netflix, symbol NFLX, which has shown increased volatility following an analyst downgrade earlier this week. The stock is off nearly 11% from the late December high and is starting to flash some technical warnings that holders of the stock should be paying attention to. When we last commented in October, the stock had spiked up to about $3.50 following speculation about a possible cable deal and earnings results. At the time, we noted, quote, "When we look at the big picture in a long-term context, we view the stock as becoming potentially dangerously extended. We would exercise extreme caution on the long side and consider profit taking on rallies in Netflix," end quote. After trading up another 30 points or so, the stock is now back to about the levels at the time of our last comment. Recent trading suggests that a correction or more significant trend change could be underway, and a pullback that reflects the size of the preceding rally is due. We would consider protecting profits if long the stock and would be waiting for a better entry before considering any new long exposure. Looking first at the weekly chart, we see a very sharp rally starting in October 2012 that has run up over 600% and recently formed a possible double top. We have a possible breakdown out of a rising wedge with negative divergence and momentum, which is a combination that suggests caution on the long side. It is often well to remember that corrections reflect the size of the rally preceding, and the stock could pull back significantly even within the context of a longer-term uptrend. Dropping down to a daily time frame, we see a lower high and a gap down through the 50-day moving average, hitting important near-term support at the trend line. The stock appears vulnerable here and needs to hold about the 334.50 level near term, or the downside could expand. Below the trend line, important support appears at about 309 and then the 270 area. Although that seems like a long way down, consider that on a weekly chart, $270 would be only about a 33% retracement of the move up from the late 2012 lows. Thanks for watching, and visit us often at BreakingCall.com.